Hey everyone, it's Mike, and in this presentation I'm going to talk about order flows, prominent point of control, and divergence. And prominent point of control is one of the new additions that we put out in the Orderflows 2.0 software. Before we had divergence in the original software, but in the newer version we've added a few extra tools, and one of them is the prominent point of control. And what I'm going to talk about today is how to use them together. So before we begin, a brief disclaimer: this presentation is for educational and informational purposes only, and is not considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, the tools I use in this presentation are the Orderflows Trader software, which I developed together with a programmer. And basically, I sat down, I was using a different volume footprint chart, and I told them what I wanted to see in my volume footprint chart. And one of our early tools was the divergence indicator, as well as the ratios. And I've done videos before on ratios and divergence, but in this particular one, I'm going to talk about I'm going to talk about divergence and prominent point of control. So what's a prominent point of control? Well, it will be highlighted in the chart, if it's a bearish one, it'll be a magenta color. If it's a bullish one, let me see if I find one here. I had one earlier. It'll be a aqua color. Now, every bar has a point of control, okay? But there's times where, based on my analysis, I've found that they can lead to market reversals, and that's why we color them aqua or for buys or magenta for a sell. If it's just gray, that's your normal order flow point of control. There's nothing spectacular in it as far as being prominent for helping see a potential market turning point. Now, every bar has a point of control, okay, and it's just all it is just the point in the bar with the most volume. That's it. Okay, there's no special calculations or nothing. All it does is find the price level in the bar with the most volume, if there is, every bar has one, and it just puts a box around it. And prominent point of control is a point of control that I recognize as important in the order flow analysis. And it often occurs at market turns and provides support or resistance in the market. Okay, so now, the next thing is the divergence. Order flow divergence occurs when a new or equal high is made on negative delta, or when a new or equal low is made on positive delta. Now, order flow divergence is also a potential reversal signal. So you have a prominent point of control, which is a reversal signal. You have order flow divergence, which is also a potential reversal signal. Now, there can be more than one divergence in a trading day. You could keep making new highs, you could keep making new lows throughout the day. So you can have more than one divergence in a trading day. So, let's take a look at some charts here. And this is E-minis. This is an 8-range chart. People ask me, hey, what's the best chart to look at? It really comes down to you as a trader, what you like to, how you like to trade, your mental mindset, and, charts I like to look at, probably somebody else doesn't like to look at. That's fine. That's what makes the market, is people trading on different time frames with different opinions in the market. So what a divergence is, again, is you have a new or equal low with a positive delta, like you see here, 74, and you have this green arrow, which indicates a potential buy. Okay, now a red one, well, you can't see it there. Let me see here. You can see here the red. Sorry, it's not an arrow. It's more of a triangle. It's got negative delta right at the new high. Right, you got negative delta at the high. Well, what does that mean? Well, you're at a high. You got aggressive sellers coming into the market. And here you have a prominent point of control. It's colored magenta. So I know I've got resistance up here in the point of control, and I've got aggressive sellers coming in. So what do I have? The market's rallied up to a level where there's resistance, and aggressive sellers are also coming in. So it's like you hit a level, man. You hit a level where there's going to be resistance in the market, and you add to that aggressive sellers coming in. That's what you want as a trader. I mean, those are the points that you're looking for. They're going to give you good trading opportunities. If you're just buying or selling every divergence by itself, there's going to be times, on a market that's falling, market sells off, you get a little bit of buying coming in, you get the positive delta, you got divergence. Do you buy it there? Can it reverse? Of course it can, but can it keep going down? Can it keep making new lows? Yeah, the market bounces off of lows all the time and then continues making new lows. Really what you want to be looking for is some sort of supportive buying as well in the market. So what I'm looking for is, the red triangle and a magenta color, or a green triangle and a aqua color. So here you got a nice trade here. This is an 8 range E-mini chart. 2720 all the way down to 2714. You got a couple of prominent point of controls here. No divergence because it's not at the high. You got some resistance. Market just it just sort of goes sideways here. It doesn't really go anywhere. Then you get up here. You have the divergence. You got a ratio. That's also a trade I like to take. Then you got here the next one. You came up and made a new high by a tick. And you got a divergence again, and you got the prominent point of control. Again, same thing. We sell off from the 2733 area all the way down into the 27, what is this, 2728 area. Down here, you got some supportive buying. You can see in the prominent point of controls, you don't have divergence. Come back up here, you bounce up to a resistance area. You're just sort of going sideways at this time. Then finally, you break down. Got some support here. Market goes sideways. And market starts to breaks out below this support. What do you got? Support becomes resistance. Boom, you got a prominent point of control, a bearish one right here. Market sells off. Where does it sell off to? It sells off down to this area where you got some supportive buying. You don't have a divergence, unfortunately, because it's not a new low, but you do have the positive delta, and then the market makes this nice rally up there. Literally from 2720 all the way up to the 30s. Then what happens, you get up here, you got ratio and divergence, which is also another trade I like. I mentioned that earlier. I've done many videos on that. And you start to sell off in here. You got the prominent point of control. Well, here, okay, so you hit this swing high, bounce off, come down to support here, then rally up to this divergence. So again, prominent point of control acting as support. You notice you can almost draw a line out here like this, where you came right down to I'm not sure if that's to the exact tick or not, of that prominent point of control, and then you bounce back up another 5 points more or less. So you get up here to this prominent point of control, no divergence, and then you sell off, and then you start going into the close for the day. That's the end of the trading day. Then into the next day, what do you got here? This is right after the reopen. You got a divergence and prominent point of control. This one falls apart. This is within the first hour of the reopen of, I forgot what day that was. That was July 4th or something like that. What is that? No, July 5th. Then you get down here. So you get stopped out on this trade. Okay. But then, boom, you get another trade. Supportive buying in the prominent point of control and divergence. And the market rallies. It just keeps going up, from 2735 all the way up into the 40s. No bearish point of controls till you get up to here, 2746. No divergence. You hit an area in here of some support. Market does bounce up a little bit, then falls down. Comes down to this area of support, prominent point of control. Again, you could see how these prominent point of controls are holding, how they react in the market. If you know here that, hey, I have some support, maybe I throw a bid in here for the pullback, it's going to give you a low risk trade, because where's your stop going to be? Your stop's going to be just below the low of this bar. Okay, so that's what, when people talk about having low risk trades, with tight stops, these are those types of trades that you can take. You're risking, maybe a point to get, how many points, from 35 all the way up to 40, that's risk 1 point to get 5 points. You got a prominent point of control, bearish one up here, no divergence. Market does sell off. Then you get down into this divergence, no prominent point of control, but it's a divergence and a ratio, and the market rallies up. And I'm just trying to find the next one here. You got a prominent point of control here, no divergence. Market just sort of goes sideways. Rally up here, rally up in here. You got divergence and prominent point of control. Market doesn't really sell off. You do make a new high by a couple of ticks. I think there's 2 ticks. Tries to sell off here, doesn't happen. Then you rally back up, get a new high, prominent point of control, and a divergence, and the market sells off a little bit. It's not the greatest trade, but from 63.5 down to 60.5, 60, before it rallies back up in here, and that was it. So that's on the E-mini 8 range chart. But again, let's take a look at a different chart. This is crude oil. Okay, alrighty. So I'll just go back to the beginning here. See what there is. So here's just a divergence by itself right after the reopen. Another divergence, no prominent point of control. You got a prominent point of control, first one here at just after midnight. This is July 5th, and market does rallies up to an area where you got prominent point of control resistance, and you come off a little bit. Prominent point of control doesn't really work out, and then you get one here, kind of just goes sideways afterwards. Sideways, so you've got some resistance up in here. Right here at it was around the 14-15 area, and you're just sort of hanging around. You're going sideways before you put in this nice little rally. Again, this one fails. There's no other way to say it. Here you got a prominent point of control, no divergence. Market comes off a little bit. Get down in here, 753. I know at this time there's market's moving pretty fast. I can see it's an 8 range chart. Get 753. I've already got 3 bars forming. Okay, here's a prominent point of control for resistance. Market sells off, you rally back up. Where do you rally back up to? Again, you rally back up to literally to that point of control. People always wonder, why does the market just rally right back up to that level? Well, it rallies back up to that level because you have resistance there. And again, this is sort of the beauty of understanding order flow, that, hey, you know what, I've got some resistance here. I can throw in an offer. I don't want to say take a shot, but if you know there's resistance here in the point of control, then is it worth to you to throw in an offer somewhere right around that point of control and maybe risk 2 or 3 ticks and get filled, and hopefully you're risking 2 or 3 to get 10 or 15 back? Yeah, you do that all day long. I mean, these point of controls, there's nothing special in the order flows, but you can see how oftentimes these prominent point of controls, the market rallies or sells off back, it retraces right back to those levels. Like this one. Say you want to take a shot here, you get short here, throw an offer here. Okay, you get stopped out. That's not the end of the world. You're gonna get stopped out. Would you rather take 2 or 3 tick loss to get back 10, 15, 20 ticks? Yeah, of course. You're gonna have a few losses. Now you had some data come out here. That's why there's markets in fast market mode. NinjaTrader can't keep up with the data that's coming out. It's one of the drawbacks there of dealing with NinjaTrader. Then here, you get down here, you got a prominent point of control. This is 10:13. I don't know if you would have taken that because it's only 13 seconds. 10 o'clock and 13 seconds afterwards. Prominent point of control and a divergence. The market does rally. Where does it rally up to? An area where you get prominent point of control, and it just sort of hangs around that area. But then later, down here, 10:08, prominent point of control and divergence. And you rally 72, 73 bucks. Up to an area, you got some prominent point of control up here, 73.15. Prominent point of control just sort of goes sideways. Again, another prominent point of control. Market came off. Prominent point of control for support. Market rallied. It's not a divergence in the sense of a new low. Then again, you got another prominent point of control in here for resistance, and the market sells off. Get down here. Prominent point of control for support. Market rallies. Another prominent point of control for support. Market rallies. A bearish point of control here. Again, market came back up there. And, is it worth it to sell it at 27 and cover it down here at 17? For a quick 10 ticks, and you're going to risk, 1, 2, 3 ticks. To me, those are, I like to say, no-brainer trades. But again, those are those type of trades. Are you going to risk, buying it here at 73.10 for a pullback? Trades down to 08. Again, if you're risking 2, you'd be stopped out. If you're risking 3, you wouldn't. And it rallies from 08 all the way up to, from 10 all the way up to 22, 23. Prominent point of control and divergence. This one fails. Another one here fails. But then again, you take the 2 losses there. Okay, you move on. It's not like, oh, I got a loss here. You got a loss here. Mike says you got to trade these, but I had 2 losses in a row. Okay, well, you know what? You keep trading. You don't just give up, and say, oh, I got to start handicapping every trade that comes along. No, you wait for the next trade. Boom, here it is. Okay, here's your divergence and your prominent point of control. And you're getting long somewhere in here, called 72.65. What happens? Market shoots all the way up, you know, up to 73 bucks up here, where you got this bearish prominent point of control. Then you just sort of go sideways, going into the evening session. This is for the 6th. And you got some prominent point of controls here. This is a ratio and divergence, not a prominent point of control. Prominent point of control for support. And look how this market comes back. You know, this is why, you know, I don't say I spent all this time doing this analysis, but this is analysis that I've done. And there's a reason why the markets pull back, because you have supportive buying in here first time it happened. So you know you could be getting long in here and risking just a few ticks, 2-3 ticks on the trade. If you get filled here, that's great. You know, you're buying it at 73.00. You know, you can take it up to 10 or 12. You know, those are those low risk trades. You're risking 2 or 3 ticks to get back, you know, 10, 12, 15, 20 ticks. Here's a nice prominent point. This time it didn't pull back, but you know, you got your prominent point of control, the bearish sign there. Market sells off. Okay, this one again, yeah, you had some data in Europe come out, so it's sort of fast market. I'm not going to say, well, you could trade the pullback up there. When it's fast market like that, sometimes you get the prominent point of controls, and I don't want to say it's pointless, but you know, take it with a grain of salt when the market's in fast market mode. Prominent point of control and a divergence. Market does rally a little bit before coming back down in here and making the new low. Where you have the divergence in a ratio, then you get a nice little rally going on here. This one you don't have a divergence. You do have the prominent point of control though. Market does rally up off that, so you got the supportive point of control. Again, 8 o'clock. Prominent point of control right here. No divergence. Rallies up to an area where you got some resistance selling. Just sort of goes sideways. Again, another prominent point of control. Market rallies up to an area of prominent point of control. Market sells off a little bit. You know, here, another prominent point of control. Market rallies up to an area where you got prominent point of control for resistance, down to an area where it's supportive again, and the market goes back up. Then we just sort of go sideways in here. Again, you know, you have your prominent point of control here, 73.31. You're throwing an offer here at 31. You know, take it up to 33. And you stop maybe at 34. I'd go above the high at least. And you know, you're risking 3 ticks there, getting short at 30. You know, it trades down to 20. It gets down to 19. So, you know, you at least could have got 10 ticks out of there, hopefully. Another prominent point of control. This one, again, if you're playing the pullback, would have stopped you out. But then again, you know, if you're playing the pullback on this next one, again, at 34, where's the market trade up to? It trades up to 36. You got a 3 tick stop. You know, 34. Maybe you're covering it down here at 24. That's 10 ticks. Again, another prominent point of control. No divergence on this one. Rally up to an area where you got another prominent point of control. You got bullish prominent point of control. Rallies up to a bearish prominent point of control. Market sells off. You know, bullish one that fails, a bearish one that fails. Then again, you know, you got these prominent point of controls here. You know, you maybe take a shot, throw an offer up in here, get filled. You know, 86 doesn't quite get down to 7. You know, doesn't give you the 10 ticks. Just sort of hangs around there before selling off, and then you get another bullish prominent point of control. What does the market do? It sells off. You know, rallies, comes right back down to that level, 73.64. And then, you know, from 64. Could at least get 10 ticks, 74, you know, all the way up into the 80s. You know, then you get stopped. You know, if you're trying the same thing here, you get stopped out. Okay, fine. You know, that's what happens in trading. You know, a bullish prominent point of control that fails. And that was it. You know, closing out for the day. So again, you know, prominent point of controls and divergences. You know, look for them. You know, I know some people that trade each of them separately, but I know some people that have been coming back to me, giving me some amazing feedback when you use them together. And you know, it's just tools out there that's available on the Orderflows Trader software. So again, you know, if you're interested in the Orderflows software, go to orderflows.com to learn more about the trading software that I use in this presentation. So thanks everyone, and have a great day. Bye bye.